Yes, my people, what you man telling me? Welcome back to another one. So today I'll be talking about moving averages, and all it is just it helps us to find our bias. This is what you need: the 20 and the 200 moving average, and then once you pair it up with the market structure, you are pretty much unstoppable because it literally is the green light to when we can take trades and when we can just have to kind of hold back. So you're probably asking like, what is the moving average? Like, what is it? And pretty much all it is just, for instance, if I have a 20 moving average, all it is the last 20 days of price, and it will mark out the averages, and then that's where you know price is, and vice versa. For instance, within a 200 moving average, it's just the last 200 days of price, and it just averages out what price is doing. So if price is above my 200, I know that price is bullish, and if price is below my 200 moving average, then I know price is bearish. And when price is kind of stuck in between both the 220, then you can kind of expect for price to kind of consolidate. But I'll show you guys on the charts. So first and foremost, if you're probably asking like, where can I find this moving average? If you go to your indicator section over here, so right over here, if you go to the indicator section, once you click it, just type in MA. Once you type in MA, you'll see moving average ribbon. You'll click on that, and then when you click on that, once you go in the settings, just tick two of them and make sure it's SMA, make sure it's closed, and then you have your 20, and then your 200, and obviously you'll pick your own colors. Make sure time frame's on chart, and then wait for time frame closes, and that's it. And then you press OK. And then that's all you need. And then once you have that, then you are pretty much good to go. So currently this is the daily chart, and I am currently on gold, and we can see that price is above my 200 moving average. So if price is above my 200 moving average, what should I be looking for? I should be looking for potential longs. If I go to MNQ and I zoom out, look, price was above my 200 moving average once upon a time. So I know that this section here, I should be looking for longs. I know that this section here, I should be looking for shorts. I know that this section here, I should be looking for longs. So can you see how with the moving averages, it helps you out and it filters out the noise, because now you can just look at the moving averages, market up with market structure, and you have probably one of the best and strongest biases for the day, because the moving average is the green light to the markets. And if you go to another chart, for instance, I can go to Meta. Meta, if I zoom out, prices was above the 200 SMA. You can look for longs. Price went below, you can look for shorts. And you can see now prices above the 200 SMA. And you can now look for potential longs. If I go to Microsoft, you can see price was above the 200. It went below, it went back above, it went below, it went back above. Guys, so in this situation, you have to understand that these moving averages are telling us a story. And you guys are probably thinking, oh, well, like, why is this like that then? Why are you looking for a longs below the SMA? You have to remember price is fractal. And this is based off the weekly. If it's going to load. And you can see that on the weekly, what's this? Price is above the 200 SMA. So what can I do? I can look for potential long. So that what's the word? That points me to another thing that you guys have to remember. Whatever time frame you are on, you have to follow the SMA based on that time frame. And the reason why I'm saying that is because if I go on to gold, this is my weekly time frame, and price is clearly bullish. If I go to my daily, price is clearly bullish based off the SMAs. But if I was to go down to my 5 minute, my 1 minute, price is actually below my SMA. So what should I do in this situation now? I should be looking for shorts. There's no need for me to try and entertain longs. Why? Because the SMA is telling me based on my 1 minute, well, this is the 5 minute, based on my 5 minute time frame, or even a 1 minute, that price is bearish. So once you filter out the noise of trying to look for longs based off the SMAs within this time frame, it takes out the guesswork, because now I know that, okay, cool, price is below the SMA, we have a bearish zone over here, price might tap into an area of interest, we might have our SBS, and then I can look for potential shorts. I know that if price starts to reverse, and then we start to respect the SMA and we start to move higher, then I now know that, okay, cool, you know what? Price now wants to be bullish and start making himself back up. And that's why, because I know that through the SMA. And obviously we'll pair it with market structure and stuff like that. So with the SMA, it removes the guesswork. I can go into any charts. Look, this is the 5 minute chart and price is bearish. This is the 5 minute chart, price was bullish. But you have to understand that SMA is not gonna be the same all the time. It's gonna switch. And if you look at this area here, these are the areas that you want to avoid because you have no clear bias. The SMA, we're above, then we went below, we're above, then we went below. But this is also what? A ranging market environment where price is stuck between a specific high and a specific low, specific high, specific low, specific high, specific low. So, yeah, can you see how when you pair it up with the market structure, guys, it is game over. And what's happened? Price moved higher, we moved back lower. But as I always say, follow the SMAs because it's going to remove the guesswork. And if I go to silver and I go to my high time frame, look, price is above my SMA. So what should I be doing? I should be looking for potential longs, but maybe on my 5 minute time frame, price is below the SMA. So what should I do based off my 5 minute time frame? I should be looking for shorts. So you probably saw in this photo that there was four examples. So you have the bullish, bearish, which is price being above or below. You've seen a range now because I showed you this one example now, and then we have expanded reversal. I don't use this. I don't use this method that much to take trends, but all it is just if I was to. I think there was a good example on. I think it was gold. So yeah. So if I go to, is it NQ? NQ? Okay, cool. So in this situation here, we can see that price is the 20 and the 200 are very far away. There's a large gap. So there's always a chance that price may make its way back down and then balance itself out and then obviously make its way back higher because overall price is still above the SMA. But we have to understand that pretty much all that's telling me is that price is in a pullback. But you just have to be smart with it. Again, I will show examples later on. But for now, you want to be following your SMAs. Or on whatever time frame you're on, you follow the SMA based on that time frame. So let's just say you were bullish. Your bias was bullish based off the daily chart, but then on your 15-minute price is bearish. I can't take a longs. I now have to wait for price to flip, obviously in terms of market structure, but get above my SMAs, and then I can start taking the trades long. So now I have not only the SMAs aligned, but now I also have market structure aligned. Hence why you gotta follow the SMA based on whatever time from you're trading on. Um, and that's about it, guys. So remember, if again, like if I just because the weekly is probably one of the most easiest charts to see SMAs, but you can see price is bullish. Yes, price is bullish. MNQ price is bullish. Bitcoin price is still bullish. You see that? Price is still bullish because we're still above the 200 SMA. It's just that we're in the pullback phase. So if I take it back a notch, if I take it back a notch, we had what? We had a sweep of the highs. We failed to take these highs, but we have expanded reverse, potential expanded reversal. Why? Because the 20 SMA and the 200 SMA is far away. So there's always a chance that what's price gonna want to do? Price is gonna want to make its way lower. As long as we respect that S200 SMA, we're still bullish. It's just that price is in expanded reversal, where price has expanded way too much. Price is exhausted. Price needs to rebalance itself out, and then potentially price is gonna want to start making higher highs and potentially higher lows. But as long as we're respecting that 200 SMA, overall my buy should be longs, guys. So and then that's about it. And then if I was to exit that out, we can see how price is no longer. Oopsie. We can see how price is no longer in that expand reversal. Price has balanced itself out, and now we are hoping that price is gonna make its way higher. Look, price is bullish. Price is bullish. Price is bullish based off the SMAs. Bullish, 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 bullish. Everything is bullish. I don't have any bearish examples right now to show you. But price is pretty much bullish. but maybe on a different time frame, such as the 5. Look, price is bearish based on the SMA. Price is bearish based on the SMA. Based off the SMA, price is bearish. So whatever time frame you're on, you gotta follow the SMA based on that time frame. And that's about it for the SMAs. So SMAs are very important because it gives us the green light to the markets. It filters out the noise, especially when you're kind of confused on what price wants to potentially do next. Because you're using the averages. You're using the averages on what price has done over the last 200 days. Um, as I always say, victory belongs to the most tenacious. Wherever in the world I'm wishing you guys a good morning, a good afternoon, a good evening, and a good night. And I'll see you lots in the next video. Peace and ciao.